Fox Business is learning that the hedge fund world, the street's so-called smart money, says after this wild week, tomorrow could truly be the reckoning for the market. Charlie Gasparino, why? You're getting us exclusive details.
Yeah, I mean, this is what hedge fund traders are telling me is tomorrow is a big test. It's pretty simple. And, you know, if you talk to traders and you look at how they're positioning, the last thing they want to be is long going in the weekend, particularly with a dearth of information. So barring something like a emergency Fed rate cut, which is always possible, and I'll get to that in a minute, tomorrow could be a pretty messy day because you don't want to have your positions long going into the weekend. Who knows what's going to happen over the weekend? Obviously, there could be more deaths or, you know, another development that shakes the market. It's just not worth it. So so what people are telling me is the algos are all set up, and tomorrow might be the freight train. Now, just sort of you know out there, I mean, I'm getting this from a consensus of hedge funds. I can't tell you what the margin of error is on the number of people I called. So just I'm relaying, you know, what my reporting's saying. You know, if it doesn't happen, don't tell me that, you know, I sold all my stocks because of you. Always be cautious on all this.
Well, yeah.
But generally going into a weekend amid this type of uncertainty, and here's the problem, Liz, and it's stuff that I've been reporting on. Wall Street has no idea about the size and scope of this thing. The information coming out of China is not believable, according to the major research the major research shops out there. It's hard to gauge just how this is spread in China. You know, we know what's happening here. You got that, okay? But if you're looking at this from a global standpoint and how it might impact GDP of one of the world's greatest economies, or I should say biggest economies, you know, it's hard to figure that out. And that's what Wall Street does. It looks at, you know, how this might impact GDP and earnings going forward for U.S. companies whose stocks trade on major exchanges.
Yeah.
And it's almost impossible to figure that out.
You know, Charlie, I want to show you, too, this may relate, because I've been watching the oil markets for the past 72 hours, watching it basically collapse.
Right.
Which brings me to the question, which long funds might be in real trouble here? And you know, you can't really tell because there isn't a ton of transparency for these, but we were looking at some other funds, OEPSX and IVYNRG. Guys, can we get those up? I'd sent them earlier. Both are down dramatically here today.
The funds, well, let's just back up a minute. The funds that are taking the biggest hits are those funds, and some of these brokerage houses offer these that go long volatility, that basically are volatility bets. If you're looking at a fund that tries to capture volatility, as volatility spikes, it's very difficult. So those are the funds that are getting blown out, and they're on the Merrill Lynch platform, they're on the UBS platforms, they're out there. The other ones are, you know, commodities are taking a hit, obviously, and the commodities are taking a hit, particularly oil, on the notion that this will have a decrease, a negative impact on GDP. We're going to get hit with GDP anyway.
OEPSX, which is oil equipment and services, down 41%.
Right, but that's the bet.
Year to date, rather.
The bet is that there's going to be a slowdown because of this. Now, here's again the problem is with a dearth of information, you assume the worst. And I think one thing I'm getting to wrap, but I'm going to make 2 points before I wrap. Number one, I want to make the point is in a dearth of information, you assume the worst, you sell. Okay. The second thing is this: tomorrow's a rough day. It could be a rough day. Be prepared. And one more, I'm going to slip in. The Fed could swing into action here. There's lots of talk, Liz, about a Fed emergency rate cut that comes maybe even next week. I mean, who knows? And when that happens, you know, that could quell some of this. And Kevin Warsh, former Fed governor, smart guy, I know the guy, put out an interesting column in the Journal today that basically said the Fed should swing into action. And, you know, usually those are the type of
Terry
columns
Duffy of the CME said that would not be a good move.
Why?
Because they've got to be calm about this and preserve dry powder.
But this is one of the times you do it, when you have irrational exuberance destroying market value. The one thing the Fed needs to do is kind of kick in. I mean, Milton Friedman talked about it for years. This is where monetarism does work.
Yeah, well, as we're looking right now, the Dow is now down 835 points. I want to let our viewers know.
I don't mean to talk it down.
Well,
sorry.
No,